Hey, welcome to Mortgage Minute for Friday, October 1st. Well, we open it with headlines saying, Carney sharpens warning on debt levels. Basically what this is talking about is Mark Carney saying Canadians aren't getting the message that you can't get it too far into debt. But at the same time, we're seeing Canadian auto sales set a record high. So what we're seeing here is two things. In the States, we're still seeing ongoing issues down there. The Bank of Canada and central banks around the world are saying consumers got to get control of debt. But when we see record auto sales, it tells me that Canadians have consumer confidence. One of the things you've seen in the media recently is this whole talk of obviously bubble, but you remember that affordability report that came out saying that markets like Vancouver are on a potential bubble and affordability is out of whack. What you're going to see here moving forward is all going to come down to one thing, and that's consumer confidence. When I see that Canadians are buying cars and auto sales are hitting records, that tells me that Canadians are still confident about consuming. And the other side is when they're not, we're still taking on more debt, that means they're confident to do that. I think there's two things that are at play here. We're not in a bubble territory until we start reading headlines telling us that there's high unemployment. Because as long as the interest rates remain low, and they're going to have to stay low as long as the Americans continue to have problems, then we're not going to see a spike in interest rates. And as long as we see consumer spending in the market, we're not going to see a huge spike in unemployment. In order for us to have a bubble take effect, we're needing a combination of two things. One, spike in interest rates. Two, a spike in unemployment. And all this comes down to consumer confidence. So in my opinion, we should not see any significant bubble bursting in the Canadian housing market. And the fundamental reason is this: Canadians are still confident and they're still employed. And interest rates are going to continue to remain low for an extended period. That's the Mortgage Minute for Friday, October 1st. Go to my website at peterkinch.com for more information. Thanks.